Hello, everybody. Hope you're having a good evening, afternoon, morning, whatever you have, whatever you're at. Let me actually, before that starts bothering us, let's turn this off. Why? Now, where's the chat? Let me just get the chat running. Hello, Leo. What the hell did you write? What, Stunks? What are you doing? Stunks, what are you doing? Why are you screwing with Leo's hello? Oh my god. That was probably by accident. Leo, hello. Hi, hi, hi. Hi, Leo. Stunks, what are you doing to Leo? Stop it. Stop it. Joe, hi, hi, hi. Stunky. Michalis, hello, of course. And other people who I probably did not realize already joined. Hello to all of you. Probably will say hello in a minute or so. So hello to you all. Let's get into the swing of things. We want to see what the market is doing today. Rather, what should we be expecting for the upcoming sessions, if you will. 1 minute is always not really all that interesting based upon this, looking at, us having 29 minutes barely left. We're probably gonna be going towards potentially, if anything that wouldn't even make that, it's probably gonna retain the smaller channel maybe. Given this, maybe probably slightly, maybe even lower, like 685 ish. So we have like a movement of $3, $4, $5, $5, $6 for this for the upcoming session. The leftover of the session doesn't seem like the upcoming minutes doesn't seem like they're going to be all that interesting, nor all that volatile. Looking at this is kind of midway, halfway to the upside. So at face value, it's back and forth, but really we have to acknowledge that it's more of an uptrend. So really what it's saying that, based upon today's leftover session, we're looking probably more of an upside rather than a downside, although having some entanglement. So all in all, more bullish than bearish, right, on the 5 minutes. But here, this is where things start to get, as usual, very interesting. 30 minutes can allow us to predict a little bit further out. I would argue kind of into halfway into tomorrow's session. So this looks a lot more negative, really. That appears to be that we want to be testing that median, which is sitting right around 6,077, right? That's what it appears to be. But then again, remember, it is bullish at face value, so can actually hold on. And maybe there is, maybe there is a sort of a median channel right here, a diagonal one, that potentially this will be holding on to. Let's see what else is going on. What else is going on is that we're testing basically median on the 45 minutes, which it's kind of a half measure, halfway sort of something that allows me to have confirmation bias towards the 30 minutes or the 1 hourly. If you're more attentive, you can see that we were basically able to squeeze the vast majority of this bullish momentum, and we were just able to squeeze to that median, and we definitely doesn't appear to be based upon this that we can push through, or best case scenario maybe test it, right? So basically it's kind of like halfway, but really if we're looking at the hourly, which kind of helps us to confirm whether the 45 or 30 minutes is more indicative of what we're actually going to see, well, the hourly is more indicative of being bullish with a potential turnaround within by the end of tomorrow's session, right? Looking at several hours forward based upon this, we can actually predict that some of it will be spent overnight, of course, right? If we're talking about the overbought territory, moving us then into lower ranges for tomorrow, potentially starting up with a gap again between today and tomorrow, starting the lower end. Hello, Alan. Good to see you, brother. Slightly accelerating to the upside throughout the day. So we start lower while potentially ending the day higher, right? Now, if most of the damage will be done throughout the nighttime, throughout the morning rather, not the nighttime, right? If it's going to be done overnight, it will affect what we see on individual assets, such as Palantir and the rest of them, right? But if we're going to have that throughout the morning, it's far more likely that we're not going to have that sort of translation from the indices to the individual assets as severely as it normally would. In other words, yes, maybe a tiny gap to the bottom of this median that we're in right now, the larger sort of cycle of things, right? The shorter, the larger. And that could imply that, but it not necessarily means that we're going to break all the way to the bottom of the channel, which means again roughly around 70.69. Just to be aware, that's the bottom of this current sort of shorter range channel going on. This is why we're testing it up and down, as you can see, and part of the prediction was that we will test that channel, but will remain within the confines of it. So potentially what we're seeing on the S&P is that we have confirmation that we have more bullish momentum to squeeze before we actually become bearish, before we actually feel all the bearish momentum. Now, at face value, if we're looking at the daily, we're actually going to the downside. As long as we do not penetrate the actual oversold territory, of course, we'll have to see whether we're going to be stopped by the 20% area on the stochastic RSI. If we will, that's far more indicative of a push off from this. Basically, we'll push off like that and we'll end up having more of that bullish momentum, giving us the possibility of retaining the price action within the confines of the median. That is in the daily scheme of things, meaning we're not really seeing what it takes potentially to break as low as the bottom of the channel on the daily. We're looking at 59.36. So if anything, yes, even if we have a little bit more pain, it doesn't necessarily indicate that that is it. This is the breakdown. Why do we see that? Because if you can see right here on the weekly, we see that we still have enough bullish momentum in the system as it is. In fact, we're bullish dominant and we're pushing into, well, we are now in overbought territory, giving us a little bit more bullish momentum. If we're going to look objectively where the junction of the end of the year and the current channel that we're seeing on the weekly, that this could be what signifies the location to which we're going to have entanglement with a rather strong resistance, roughly puts us at around 6239.39 for that matter, but let's call it 6247, 6250. So basically that entire range potentially gives us, if we will have that execute before the end of the year, since we have roughly about what, 15 days left. So that gives us about 2 weeks of actual price action. Given these 2 weeks, basically 2 more candlesticks, can we truly make it with this sort of momentum to that edge of things? I would argue that yes, it is definitely possible. We're talking here merely about roughly around 160, 170, $180 at best, right? So in reality, we have to be objective that this is possible. Is it certain? No, it's not. Because don't forget, on the monthly, we've been looking at what could be a potential failure in the bullish momentum for the rest of the last couple of months. And so do we really know that's not going to happen before the end of the year? Well, considering the potential Christmas rally, it is less likely to happen before the beginning of next year. As we're going into the end of the year, potentially seeing the Christmas rally play its way out, of course, we might see Palantir having a little bit more bullish momentum, as we said, considering the current, for example, hourly trend that we have been within for quite a while, whether we're talking about the shorter term or the longer term. Basically, both of them are quite applicable. But if we're going to look at our longer duration channel, right, the one we've been on and on for quite a while, retaining this channel, continuing as is, we can make it clearly roughly around towards $90 just by retaining the channel, right? There is some positive news about Palantir one day or another, something that is significant enough, maybe spillover from somewhere, and we have enough momentum, basically giving that this is sitting on the edge of 90. $10 on a highly exuberant day is not an impossibility. Again, the channel has well, lowered its degree a little bit, right? So if you're going to be objective about this, we saw a bit of a steeper angle a couple of days ago. We kind of, I struggled, dare I say, I struggle to call it flattened because it has not. It just lost some of its steepness, right? It's just less steep, not as the way it was several days ago. But then again, the same sort of theory applies, looking at the 4 hourly structure, looking at the bullish momentum that we have in the system still, considering that this is not a straightforward process and we still have several days ahead, we can easily see how we, of course, break through. We're not really truly expecting it to happen in the last day of the year, since we're not going to have trading on it, but of course it might have happened throughout the last several days before the market closed, right? So this is actually something we have in the potential. Does that mean it's certain? No. But again, here, given the fact of the matter, we have not yet crossed into oversold territory, so we're not really accelerating into the downside. Yes, we are seeing some ifs and noises, and we still might have convergence, divergence on that final step before we actually go into oversold, allowing us, simply it's all about allowing the actual price action to retain bullishness in order to actually make it closer to the 100. Does that mean we should all exit at 100? No, it's far too accurate. In fact, it means nothing. It only means that you guys should do whatever you think is right. Okay? Manage your own portfolios, at your own discretion, of course. This is not financial advice, blah, blah, blah. But bottom line is that this is what the technicals are showing us. Technicals are showing us that they're far more permissive before the actual end of the year than being negative. In other words, again, it becomes sort of a question whether you think you can stomach that sort of, well, ride right before the potential correction. As you can see, the correction is already starting to smell on all fronts. It's only a matter of how quickly will we get there. Will we truly initiate the correction before the end of the year? We are starting to see some loss of momentum right here, and that's not cool. But on the grand scheme of things, does that mean we're all dead in the water already? No, that does not mean that, unless we have clear signs or some black swan event. So for now, we're being attentive, but the market appears to be more bullish than bearish for the time being. Objectively, pardon me for that. Now chat. Okay, let's do chat. Remember, it has to be the combination of the asset and the indices. It's never, the technical analysis will not function in a vacuum. My power just came back on. Oh, I forgot about that for a second. Damn it. With all jokes aside, yeah, but now we actually had it. Okay. The usual plug as a reminder: the Patreon offer makes you eligible for joining us on Discord for text and voice banter, preferably voice. That way, I can actually give you proper answers. We actually sort of quit midway, mid a bit of a hangout that we do on the daily basis, in order to join and do this live. It's not that I like doing one or the other more. It's that sometimes I have to juggle things, and that's why I'm a bit late. Pardon me for that. We're just going to stay a little bit later than normal. We don't have anywhere to rush. No Zoom calls, no nothing at the end of the day. I already finished all the one-on-one calls I had for today, so we're good. Okay. Hello, lovely people. Make sure to hit the helmet and below and below the ring. All right. So below the ring. All right. So am I the only one still hearing music? I think you just might be, because the music is off and I am. Oh, I think that is okay. I think this is a joke about like music. Aqua, don't make me worry like that. Bedwars gang, hello, good to see ya. Of course. Sorry, I sort of jumped over. I didn't really notice. My apologies. So Aqua really helped me acknowledge that. Chris, hello, Chris. Indeed. Okay, refresh, solve the problem. Okay, gotcha, Chris. Yeah, I don't know what was going on with your thing. More mods than I my entire thing. I'm just gonna make everybody mods, and that's how it's going to be. No, actually, what are you guys? You're just three of you. The rest are just viewing and probably busy. Some are probably, which I hate, driving. And some are just busy at work, some with kids, some with this, some with that. So yeah, no, it's completely normal. Michalis, do you think when weekly will correct down on SPX, then the recession is here? Michalis, it's not necessarily going to be that. Look, the recession is already here. It has been here for the last 6+ months, right? More so, I would argue, the last year almost, if we really are objective. The fact that we're in recessionary sort of conditions is the true recession here. It's not truly here until acknowledged and we start behaving accordingly. Because the recession is here, if you are objectively paying attention to things. Just being kind of stifled, I guess. So it's hard to say whether the weekly is going to be the breaking point, but look, they're already all of the fronts are already screaming. I would argue, if anything, if anywhere that we would truly want to be aware when it comes to the actual correction, it's probably the monthly. The monthly will be the one to indicate a true pattern of correction breaking below the 80, giving us a distinct downwards pattern, and slowly but surely we're going to start moving into oversold. Of course, this process within itself can take a while. I mean, downward trends, depending on how steep they are, they can last what is that, 243 days, so what, a year just on the downtrend, not including the actual oversold territory potentially, and that's just give or take, right? And you're like, why 200 and something days? Is that the year? No, that's how many trading days you roughly have a year. So that's don't forget that. It's about the trading days, not how many days you have a year. Unless we're truly gonna go into 24/7 trading, which I don't think we will, because that's bullshit. Let's start with one stonk to check out. Yeah, I absolutely agree. Yeah, time to check out stocks. So thank you for that, Stonky. That is true. We need to get into the Stonkies. Let's take this one and let's remove this one. I don't need you. And let's go Baba. I mean, I'm not a fan of Baba, we all know. But yeah, let's do Baba, I guess. Let's do Baba. Baba. That is such an ugly chart. My God. That is such an ugly chart. Upside, uptrend, closing gaps makes sense. This is bullish, very distinctively trying to seek very bullish momentum. So upside from where you're at. It appears to be coordinating neatly with this, potentially giving you this much for the little bit of time, which makes sense with this. It's a bit of a relief, so that's a downtrend with some correction. Okay, that was a downwards trend with some pull up right there. Now that is bearish becoming bullish at face value. For how long, I wonder? So if weekly appears as such in the middle of the channels, and this is at the, well, median-ish, but at the bottom layer of things, I would argue that what the market is trying to do here is basically you're going up on a downtrend. So you're kind of still testing that vicinity while actually going down. So this, and this. It does not appear as if you have the eligibility to do this. And this, although being very misleading and looking very positive, I would argue that this is going to revert back. Given all this negative momentum, it will appear as a little attempt and a failure below. Yeah, you're still in oversold territory. It all makes sense. You're far more prone to correct downwards. It is trying to mislead you, to show you that there is upside, but in reality, the market is getting ready to sell that hard. It appears to be. Yeah, I'm exaggerating to the bottom of the channel, obviously, because we have 0 here. we can probably look at, I don't know, this. There will, okay, if you really want to go about this ugliness, let's try and see what we can tell you about this thing. Let's just give you the levels. Let's try. So yeah, obviously that's gonna be our. Will it? Willis it? Yes, it Willis it. Of course, yes. Now lock you in. Now go like that. What's your bottom? Your bottom is 57.20. That's your bottom, and you will probably have something around 40.30. That makes sense. I would, in fact, I would argue think it's like 40 and 34-ish right here, but that's gonna, if anything, what it appears to be like that, right? That's like a bad day for you, if anything. And yeah, so this, if you're really lucky, this, which is 120, call it 120, if you're like really lucky, but then this, not as the grand scheme of things on Baba. All right. Let's do Tesla. Okay, so this is sketchy to all hell. Right. So the longer sort of view of things when it comes to Tesla appears to be actually bullish at face value. Again, look at the quarterly. It appears to be that Tesla wants to go even higher at face value. But here, for example, your quarterly looks perfect. Problem is, this is so heavy. This will start playing its part, and when it will translate over time into the quarterly, which will keep it in oversold area. If that is being kept in oversold, that will retrace back into oversold. If that is being oversold, you're going down. And in fact, it's pretty phenomenal that we got as far as high as 422. But I think that what we're getting here is more of the translation from the S&P. It is because this asset is so neatly tied in with the indices, tied in with the S&P. This is actually not all that surprising. Those who wonder, we in fact have a chart to emphasize that. Here is the chart, the famous chart that we use here sometimes. It has SPX, which is, that's the blue here, right there. That's where the S&P is. So Tesla is the red one, so you see perfectly coordinated. Now you have the Palantir black one and NVIDIA the green one, right? So, and you can kind of see NVIDIA and Palantir are starting to lag behind, but we do think, based upon everything we've mentioned, Palantir picks up, and I haven't mentioned that about NVIDIA, but NVIDIA can do that as well. Although we're right now, although we've already been at 135, we are still testing 140, 138, 138.16, 138.86, sorry. Like all these levels, as you can see, as mentioned before, are very active levels and very important levels, and thus being tested. Does that mean we're not able to do 140? In fact, my argument is that we're moving towards 140 again to retest it. Correlates very neatly with what we're expecting from Palantir. So it all kind of falls in line, right? So objectively looking at Tesla, within the sort of principle of following what the indices are doing, and the fact of the matter that most of these assets are coupled in, at least for the time being, we should not forecast a correction on Tesla before we see a correction on the grand sort of, market, right? On the grand scheme of things, on the big picture, which is, again, indices. And so the indices do show as if they have a little bit more momentum. If we're going to look objectively at the current channel, even the most sophisticated channels that I do to break down sort of these processes that we're moving within, we've been out of bounds for quite a while. Although we're testing basically all the ranges that we've been before, what this is more indicative of is that although we are in the area of 414, this is actually very indicative of retest of 328, right there, 328.32. Now, of course, it's a gradual process. We have various diagonals and various supports and resistances that need to be broken in order to do that. Pardon me for the messy chart. It's does not really help you guys. It just confuses you probably. I want you to focus on the sort of larger, bigger picture of things. Does that mean we can still make it to 440? Potentially, with how the year is continuing, with whatever we've left from this year, these couple of last weeks, if it's going to be positive, yes, we can do that. We can actually make it higher. But I would argue that our actual resistance right now is 41450, and we should be very much attentive to a upcoming correction, steepening of these curves back down into oversold and giving us 328. I would argue within no more than a couple of months. That is Tesla. GLD, let's do GLD. GLD. All right. GLD has ran its course or about to finish running its course. Arguably, yeah. We're on the threshold of moving into oversold territory on the stochastic RSI, correcting on the monthly, like that, like so, and of course testing probably area of 215, so call it 220, 210, very easily. That area will get tested, that median that we have. Based upon this definitely correlates neatly. Let's see. Does that gonna happen tomorrow? Not necessarily. You still have time to go. I'm not gonna be surprised if the channel neatly matches. Yeah, that I'm already suspicious of that. I'm already suspicious that's gonna be the case. What, 275 is your highest high? You should probably expect to squeeze out of this 275.35. Completely makes sense. I can see that. I can see you doing this on a swift rally before the end of the year, still being in overbought territory, still not yet in oversold. Yeah, I can completely see that. And given the fact that the days are still positive ahead of this, yeah, I can easily see how you would test 275 easily. But then again, when the closer you get to 275, be aware, because we're not the only people seeing these sort of things, and some people will not stay to wait for the last second. Okay, just letting you know. Think about it from that point of view. If you would have been the guy who's holding a whole ton of ROI on this, you wouldn't want to risk and wait until the very last second. Think about it. Now, AMD, please. Let's do AMD, please. I heard about. Yes, AMD is not really doing all that great. It still probably would want to try and attempt to close this gap, given that we're on the daily and given the fact that you haven't really penetrated and oversold properly. And no, cool off. That's interesting. Where, I mean, you're squeezing a cool. I mean, the market is like dying to go for a cool off, but no cigar for you, sir. No cool off for you. That is not cool. That is not cool. It actually appears to be more bearish than bullish. You, sir, are not going to have a blast with this. In fact, it appears to be that AMD has already started its corrective period, and I would argue that there is a big chance you might not even see this 137 anymore. And since now you're testing that median 130 on the 4-hourly, 130 on 4-hourly, flat on the daily. That sucks. That sucks. Yeah, you are That sucks for AMD. Whoever's all holding AMD, get ready for roughly about 120. Get ready for 10 more dollars down within the shorter time span. Get ready for 120. When you get 120, probably going to be testing that SMA, eventually retesting it to the bottom at this rate, 113. So basically expect 113, 111, 110 in the very near short-term future, right? That expect that for you. Sorry, AMD is not doing good. AMD is not doing good at all. Yeah. Yeah, no. AMD is not doing good at all. I am sorry. AMD, even if you're gonna have a little bit of a push up right here, you're probably not, you don't even have enough to make it to the 136. Like if you're happy, you should be happy with 134, 135. Maybe the bottom of the gap, which is this thing, the 135.84, if you really want to insist on that one. But yeah. Nvidia, we're gonna go to Nvidia in a second. AMD for Alex. Yeah, thank you, Aqua. Yeah, we've done that. I think we're good with AMD now. Let's do Nvidia. Nvidia is pretty simple. Really, nothing really changed about it. We know the various supports and resistances we were talking about before. We're looking at 146.30 as the highest high, 150 as slippage area, basically something that thing that will block off the price action from continuing. If so, still that very resistance. We're still looking at 141.74 slash 140.76 as being our potential upside resistance. We will be seeing this median still come into play with, I would agree, within the next upcoming days. Still, it's going to be very, very active. Okay. Of course, it all is due to this amazing golden pocket at 138.86, 138.16. It's a smaller channel, so it's not so tremendously important, but it's there. It's tremendously important because the market tends to retest these levels on and on and on and on, highly magnetic, if you will. And since we are right on the top of it, I'm not going to be surprised if we're going to end up retesting it either within, so the rest, whatever is left of this week, we're going to be potentially retesting these levels, maybe hitting back up to 140, 141 area, retesting that just to break back down to then continue to the downside with the beginning of the year. If, well, again, I kind of, again, I'm doing this, not doing things proportional. It's basically test here, move here, like that, like this maybe, and end up basically moving to this junction, if anything, towards the end of the year. It appears to be that even if you're going to have highs, there, those highs may be something akin to this, which gives you about 142. 145 if you're like stupendously lucky, and if we make it to 145, then 146.30. So again, your highest high to squeeze through this current momentum can probably be this, given that this was just not higher enough. But if you make it to here, don't expect any slippage out here. I'm going to be very surprised. You're maybe going to be retesting it from the bottom end just to break back down, as we said, and not straightforward. More so, if we really want to draw whatever the hell that is that I'm thinking is going to happen here, it's basically retest of these levels, potentially retest of this or maybe that,